We're back on Morning Trade Live. Let's talk cybersecurity stocks. It's been a good year for CrowdStrike and ZScaler shareholders, with each stock up more than 50% over the last 12 months. Palo Alto Networks is positive during that time span, but as you can see on the chart here, it's lagging behind the other heavy hitters in that segment by quite a margin. Let's go inside out on cybersecurity in that segment. Joining us now is Alex Hamerstone, Director at Trusted Sec. Thank you so much for joining us today, Alex. What's your take on the cybersecurity space? I mean, it's been pretty hot. You can see it in those charts. Just give us your take on where you see things right now.
I think you only need to watch the news to see that it's going to continue to expand, and not just with a number of breaches, but also seeing a number of kind of new requirements coming out of states and, governments and things like that. And I think it has no sign of slowing down as an industry. But I think what you're going to continue to see happen is really these organizations to consolidate. Companies are really looking for more value. I think gone are the days of old when people would just buy kind of multiple tools and different things. And organizations are looking for that value and outcomes. And companies that are able to provide that are going to really continue to stay ahead.
So on that note, let's talk about Palo Alto, because obviously we've heard about the news acquiring CyberArk, but as we saw on that chart, and I don't know if we can bring it up again, I mean, it is lagging behind the others. Is that got to do with it? Because, the thinking here is that very much this could become a sort of one-stop shop, and I suppose, that's the goal here, to obviously give clients, everything that they need and address all their cybersecurity concerns right now with some consolidation in the space.
So I'm a huge believer in the platformization. I'm a huge believer in kind of the one-stop shop for a lot of reasons. One of which is much easier to, have staff that kind of knows how to use a certain organization's user interfaces and methodologies and things like that. I'm not here as a market expert, but I will say, kind of keeping an eye on things, it's the market doesn't always seem to kind of follow the fundamentals, especially lately. So I don't know about the effect on the short-term market, but I think long-term, you really are going to see, companies that are able to provide that one-stop shop doing much better overall. I really think that's what, organizations are looking for from their service providers.
Yeah, and a lot of the reason why, obviously, cybersecurity in this space has been so hot, and we've certainly seen it as far as an investment theme, is because of this whole thinking that, even with some of the macroeconomic challenges, the geopolitical headwinds as well, that the IT budgets are there. I mean, this is not negotiable. It's not optional as far as trying to prevent risk out there, particularly when you're talking about this huge demand for artificial intelligence. So, when you look across this space, do you believe that that is set to continue as far as the spend is there and the demand?
I absolutely do. And I think one of the big drivers is over time, a decade ago or 5 years ago, when we talked about cybersecurity, we talked a lot about breaches and loss of records and things like that. But the conversation has really changed to also include availability. And so when you see these big stories of, very large companies, having their production and systems down, for weeks at a time and costing tens of millions of dollars, it's really impossible to avoid the cybersecurity spending. Organizations, again, are not just focused on breaches. I mean, we're still focused there, but the focus is so much on availability and the drastic effects that loss of availability can have on a company, and they just need to kind of keep up with the cybersecurity to prevent that and lower the risk as much as they can.
Mm-hmm. Great chat, Alex. Thank you so much for joining us today. We've got to wrap it up there. That is Alex Hamerstone, Director at Trusted Sec. Appreciate your time. Let's trade it now with George Tsilis, Senior Markets Correspondent. And you've got an example trade. Good morning to you, George, for CrowdStrike, a sort of neutral approach. Talk us through that one.
Yes, if you take a look at CrowdStrike, Sam, the stock attempted to break out of a trading range at around the $515 area, which corresponded to levels back in July. So last week, the stock attempted to breach that. It did not. So it actually may be retracing back towards the 50-day moving average below the current price. So with that said, until it breaks out of a trading range, we're going to trade what the market is giving us. So I'm going to structure a neutral trade here for CrowdStrike going out to November monthly contract with about 35 days to expiration. And I'm essentially going to sell an iron condor, which capitalizes on a bidirectional movement of the stock contained within certain ranges. So I'm going to sell the 540 550 call spread that's above the current price, and then below the current price, I'm going to structure a 440, 430 put spread. So altogether, by structuring this four-legged trade, you could earn about $3.75 a share in credit, or $375 a contract. So in essence, the whole premise behind the trade is to stay range bound within the context of the short strike. So the short strike high is 540, and then 440 low. So it's about $60 to the high side, $40 to the downside. So it's slightly skewed for a bullish movement because, again, the stock may break out of that trading range. But with that said, your max profit is what you earn in terms of credit, 375. Your break-even levels are 540, 375 high, or 436.25 low. And the opposite of the $10 wide spread in terms of your credit is about $6.25. That's your risk. And that only occurs if the stock blows out in either direction past the long strikes of 550 high or a 430 low. So this allows us time and flexibility because the earnings for these names, both Palo Alto and CrowdStrike, are not necessarily in the near future. They're actually in mid to late November.
Okay, good look at CrowdStrike there, and a neutral example trade for that name. Let's switch gears to Palo Alto Networks, which obviously is the underperformer across the space there in the bunch. A neutral to bullish example trade for us. What do you see there?
That's right. And this is a little bit different because one of the things about Palo Alto is it recently broke above a trading range high of 205, and it seems to be retesting that in the last week alongside some of the market pullback and volatility we've seen. So with that said, I'm going to use that 205 level as a support area to structure a neutral to bullish trade in this case. And we're basically structuring a trade like the Iron Condor, but we're only using the put side of the spreads. But in this case, we're going to be selling 30 delta puts versus 20 delta puts for the Condor just a moment ago. So in essence, I'm going to be looking at selling the $200 put. These are for November, by the way, as well, monthlies. And then I'm going to be buying the 190 put below that. So altogether in this trade, you can earn about $3.50 a share, or $350 a contract. So the whole premise again here is, at the very least, to hold the $200 level between now and expiration of 35 days. Your break even, in case it does breach that level, is 196.50, and you're earning $3.50, and your max risk is 650. That only occurs if the stock hits 190 or lower by expiration. But if you look at the probabilities here, it's a 38 delta put, that $200 strike, which implies a 62% probability of profits, plus you're earning about a 53% return on risk on this trade. So the probabilities, return on risk makes sense, and the technical also pattern fits the narrative behind this trade.
George Tsilis, thank you so much, as always, for getting us across those example trades in the cybersecurity space. That's going to do it for us here on Morning Trade Live.